Hey guys, it's Key and it's Key Live Trading. Thanks for tuning to another video. So on Monday, I'll be starting a small account challenge. And honestly, I don't want to call it a small account challenge. I'm just going to be taking $1,000 and try to grow it as much as possible. And the reason why I'm doing this, I want to test my strategy to see if it is able to help me grow a small account. And also, I want to show you guys if you have a small account, you don't necessarily need to have a big account size to be profitable. And even then, if you do have a big account, that doesn't mean you can actually grow it, right? For you to grow a account, no matter what size it is, you have to have a good strategy and also be disciplined at the same time. So we're gonna be testing out my strategy, and I don't have the holy grail strategy. A lot of people use it as well, but I put my little tweaks and touches to it that it's comfortable for me, and I'm gonna show you guys how I do it. Also, this is not scripted. I'm gonna be going straight forward, so I will be making some mistakes. So do not judge me, okay? And before we continue, please like and subscribe to the channel. So let's jump in. So here, the small account strategy, right? So in this strategy, we're going to be looking to find high percent gainer stocks, right? These are the stocks that everyone is most likely looking at or paying attention to. There's a lot of buying and selling transaction, and it's going up in price, I should say. All right. So the strategy we're going to be looking to trade is the pullback momentum strategy, right? So how that works is we get a stock that is pushing up in price, and what we do, we wait for a pullback for our entry, and we enter on the first candle to make a new high. All right. Then the next thing is the profit target. I'm not necessarily going to put a cap, a minimum or maximum profit on these trades per day, because some days I might walk away with $50 because the stock market might be slow, or the stock that I'm trading is not as strong as as it could be, or I'm feeling frustrated, or I can make more than $200 where the stocks is ripping and I'm just taking advantage of it. So I'm not gonna put a like a lock-in price in terms of the minimum and the maximum amount that I'm looking to make. This is just like, just say like an average. All right, just keep that in mind. So we're gonna be talking about how do we find stocks, where do we buy, and where do we sell. All right, so let's go. So now the type of stocks that we're looking to trade, right? Well, let me put this back. So we're looking for stock that are 5-time relative volume, and we're also looking for stock that are up 20% on the day. We're looking for stock with high volume, at least 10 million shares. It could be more. The more, the better. 4, have news event making the price going up. 5, low float, at least the maximum, at least 20 million shares. The lower, the better. And price between $3 to $30, right? So the first thing, the 5-time relative volume. The 5-time relative volume is, for example, say a stock's averagely trade 1 million share per day, right? Now, if the next day that stock is trading 5 times, that means it'll be trading 5 million shares on that specific day or more. So we need 5 times or more of that, which is the relative volume, right? Now, we are looking for stocks that are up 20% or more. This is going to give us the alert that there are a lot of people trading it. That's one. And two, that price are actually going up, which we're momentum traders, so we're looking for a continuation in price action to keep going up. So when we have price going up, that's good. All right. So we're always looking for prices to go up, especially if you're going long or you're a long trader, right? Or a long bias trader, I should say. 3, high volume. High volume is just basically the total amount of shares that stock that is traded, the shares that's going back and forth in terms of buyers and sellers is trading that specific day. So now the more the better, because the fact that we have more shares being traded, that's telling us that there's a lot of activities. We need to trade stocks that have a lot of activity in terms of buying and selling, because we don't want to trade any stock that is trading 1,000 shares, 500,000 shares, because that's showing that there's not a lot of people that are interested in that specific stock. So we want to pay attention to stocks that have high shares. Sometimes you can get away with the low volume shares, but that's a little bit more risky. And we're not going to be trading or taking too much risk with this small account. All right. If you want to grow a small account, you have to be totally strategic, have a plan ready to go, and not take that home run, have that home run mentality all the time. We're doing base hits. If home run opportunity presents itself, we're going to take advantage. All right. 4, news events making the price go up. Right. These are the top, well, one of the top reason why a stock will go up or show that there's a lot of momentum is because it has some type of catalyst. Sometimes some stocks will either be momentum, sympathy play, where say if one stock is going up, most people look at it like they missed that entry or that opportunity on the next on the first stock, so they'll jump on the next stock that's making that big move, and that that fluctuation of the high, or I should say high fluctuation of people jumping on the next stock bring the price up. But the most, or the main reason I should say, why most stocks go up is because of catalyst or news, right? So we're looking for that. We don't necessarily have to have it, but it's always good to have a news because it create that foundation or give the stock a purpose of why it's moving, right? So number 5, we need that low float below 20 million shares. So the float is basically the amount of shares that's available to trade within that stock, right? So if we have a small quantity of stock, or shares I should say, in that stock, that means the price will go up faster and quicker with a little amount of volume, right? So if you have a small amount of things, right? Let's use the phone. Say you have 10 phones and there's a high demand for your phone, the price will go up easily because so much people want it. So if you have, let's say, 10 of these, you could charge 100 for each of these. These are more, but I'm just using an example. But you can use that as an example and say, yo, it's a small amount. I can easily raise the price, and there's a high demand for it. So people are going to pay for the price or the premium for that specific stock because there's a high demand for it. So our job is to jump on it, on a high, jump in that stock on at a high price, looking to sell it higher to someone else. Right? Good. So now the price is between $3 and 30, right? This one is a little bit depend on your taste, but $3 to $30, I'm okay with trading those price range, right? More likely, I'll stick more in the range of like say $3 to $10. But if there's a stock that's showing opportunity within that above that price range, I'll definitely take the base hit on that just to accumulate some profit on that trade, right? So let's go next. So now here is the software or program that I use, and this is what I use to find the stocks that I'm going to trade each and every day, right? So this one is it's called Finviz. They have multiple different ones, and I don't have any type of affiliation with Finviz. I just feel like this one is a little bit more comfortable to use. And for me, I'm once you have something comfortable, a tool that helps you do your job better or perfect, that's the one you should definitely stick with. But they have this is a screener, it's not a scanner, but I use Finviz. They have, I think, Trade Ideas, and they have a bunch of other ones that I don't really know too much about, but I have used Trade Ideas. It's a little bit too expensive. I don't really, once you're trading with a small account, you don't need anything that is too expensive, right? So in the space of trading with a small account, you use what you can have. You use what you can afford, I should say, right? You can check it out. Think or swim. I mean, trade ideas. It's a little bit too expensive for me, and I prefer this. It's a little bit more cheaper, and I just like the layout. And you get more. Well, I'm not gonna say you get more information, but it works. All right. So that's my screener. It's not a scanner. All right. And also put in the comment section what scanners or screeners that you use. Put it in the comment section and let me know. I'm curious. So now, after we find our stocks that we're gonna trade, the one that is at the top of the list that we're interested in, now we're gonna be looking for our pattern or the setup that we're looking for. And this is what you call the pullback pattern. So as you can see, just a little example. Let me get my little pencil. Well, it's not a pencil, but my cursor. You see there's high momentum of price going up. And as price is going up, the volume is also going up as well. So what we do is we wait patiently. We're not rushing. We wait for the pullback, which the pullback is right here. It come down. Once price settle, now we're gonna be locked in and we're looking for our entry. Our entry, majority of the time, high percentage of the time, is when the candle break the first previous high candle. So for example, right here, this candle right here, this is the last candle that went low. Now the entry could have been right here of the break of the candle right here, but no, if I was going to trade that, wherever you see this yellow arrow, that's where I would have entered, right? So we would enter right here. It looked like it's around, like, say 545. I would enter at 545, and if the stock or price went against me, my stop would be the low of like this arrow right here, which should be in the range of like a 10 to 50 cent stop. It don't have to, based on the share size. If you go with a smaller share size, you can definitely, lower your stop loss. But for me, based on the size that I'm going to be trading with, I'm going to use a 10 to 15 cent stop loss, right? And as you can see on this chart, where I entered right here at 545, price went up, and anywhere above here you could have taken profit, right? So one of the trick that I'm gonna be doing is once I enter in a stock and I break above the high of day, I'm gonna be looking to at least lock in some of the profit, take some partial, and then hold that and let the price do whatever it wants to. If it takes me out, then it takes me out. But at least I know I secure some of the profit that I have actually made, right? So let's jump back in, right? So you will see this pattern almost in any stock that you trade, right? The question is now, or not the question, the thing now to make this pattern work is finding the right stock to trade it with, right? You cannot just use or trade any stock and use this pattern with any stock. You have to have the stock have to have the right criteria, right? So as you can see, this stock, and you can look at this stock and tell it have the right criteria. One, the volume is up, price is also going up. There's a multiple green candle, which is showing momentum, and then we get the little slight pullback, and then we get the entry, right? And if you miss this entry, price came up again, and you could have had another entry right here. 2 times you could have actually attempted to make profit. So if you missed this first entry, you could have waited, and then second entry, you could have took it right here, and as you can see, price continued to go up, right? So that's gonna be the main pattern that I use. I do use a flat top breakout, but I'm gonna use that in certain cases. But the main one, since I'm gonna be using the bull flag or the pullback pattern more than often, I'm just showing you guys this pattern, right? So next one, buying the pullback. I'm gonna read it. and then we're just gonna elaborate afterwards, right? So entry, the first candle to make a new high, that's the apex point. That's the apex point of the bull flag, the bull flag and the flat pattern breakout. I always try to enter exactly at the breakout point, even though there's a chance of encountering a bull trap or a false breakout. This is where I was saying when I get to that level of that the breakout point, at most of the time those are the apex point because those area, that's where most either buyers or sellers are sitting waiting for price to reach. So now when I said once price get to like the high of day, more likely that's a apex point because it's breaking new high. I'll be looking to take partials because now at least I know I'll be able to lock in some of the profit that I make versus letting it play out and then it becomes a bull trap where once you jump in, all the sellers come in and pile up and push the stock down, or a failed breakout where it's the same play out where price go up but it falls down versus continuing to go higher, right? So now where I'm at. So it's there's a chance where it encounter a bull trap of or that's typo or a false breakout. But it gives me the sense that I'm following my strategy, and when you follow your strategy, it should have a high success rate. One of the reasons why I want to enter exactly at the apex point is because I want to make sure I'm following my strategy to the T. I'm not gonna jump in too early. I'm gonna try my best to jump in on that apex point, right? Once I jump into the apex point, one, it'll give a sense of me being disciplined, and that's one of the things I'm definitely trying to work on is my discipline. So following the rules to the T to the best of my ability, that's my goal. Also with this small account, and if my discipline is not on point, me growing this account is gonna be impossible, right? So let's go back in. So now, almost immediately upon entry, I want to see the price moving up. If the price move down immediately, the trade might not be ready or it's a failed trade. But if the trade works in my favor, I start to play defense by taking partial profit as price continue to go up. Right. So one of the alerts that's gonna keep me in check in terms of if the trade is gonna work in my favor or not is once I enter the trade, price action should be moving in my direction immediately. I need to see price moving in my direction immediately. If I enter and price starts to go sideways, I should be cutting that trade because either it's not ready to play out or it's going to be a failed trade, right? Sometimes we'll have it where price continue to go sideways and then pop up, but it's better to be safe than sorry. So it's best to, if you enter and the price don't move immediately, you can be give it a little bit more leeway, even like a 10-second, 20-second chance before it move. But if not, cut the trade. Even if price go in your direction afterwards, it's okay because it's better to be safe than sorry, right? Because sometimes, majority of the time when you enter a trade and price start to go sideways, sometimes there's a lot of sellers just trying to pile up to push the stock down. So once you get that pile up, you'll see a rapid pull off the rug, they might say, where price stop and just fall. It's not gonna go like this. It's just gonna just drop like someone pulled the rug, right? That's what they call a rug pull, right? So that's why I go in that direction in terms of if price is not moving immediately, we're gonna bail. All right. All right. So that's that. So next, buying the pullback again. Target. The target is always the high of day, but if the pull, sorry, the target is always the high of the day, but if the pullback is bigger than what we expected, there will be an increased risk of a double top and or a rejection. This would then lead into a different pattern known as the flat top breakout. I would prefer not to hold these position while these setup fully form. I'd rather get out of the position and wait patiently to then re-enter. So now what this is saying is, if the price action is basically forming in terms of, like, say, a bull flag, right? And then it hit high of day but it rejects, sometime it will come back a little bit and just either double tap the previous support and then continue to go up and then break that resistant level, or sometime it will come back a little bit. It don't even go back to the previous support. It'll come back a little bit, like pull back a little bit, and then break through. So what I'm saying is, now, if that don't work, if the first high of day retest does not work, either take the profit or close the trade and wait patiently until we try to retest that high of day again to potentially have the price go in our favor. And even then, sometime it won't go in your favor. It's just to give it another chance. But the fact that price is actually holding up, then there's a high chance that it will break through that high of day. All right. Hopefully you guys understand that. Now, the risk factor, right? Stops are tight and these flag patterns are typically strong, right? However, false breakouts and double top rejection are risk factors to watch for. To help avoid false breakout, it's important to confirm there's no large sellers on the DOM. I will show you guys what the DOM is. Most of you guys know level 2. I prefer to use the DOM. Check the position of the 9 EMA relative to the current price, and assess the size of the initial pullback retracement. The bull flag and the flat top breakout are among some of the most powerful pattern traded, right? So this is basically telling you to assess certain levels. If price doesn't break out the first time, see if there's a big seller there. Is there a hidden seller? So now you have to kind of gauge these area, because if you have an understanding of what's blocking price from going up, you will have a better way of maneuvering if you do decide to retry the entry. So now, say if price pull back as well, if it goes back to a certain level, assess that area. Look at what price is doing at that specific price range. Is there a lot of selling? Is there a lot of buying? If we see a lot of buying at that level, that means more likely there's someone that's trying to support that level. And if we consistently get more buyers to hold that level, there's a high chance that price is going to continue to go higher. If it's the opposite, it's more selling, more likely price is going to continue to go down. So you have to assess these key area, these apex point, the 9 EMA. These are your support and resistance. You have to pay attention to these levels before and even when you're actively actually trading the market, right? Now, a stop loss. Our stop loss is going to be estimated 5 to 15 cents. No more than 15 cents. Sometimes you might get some slippage, but for us to hold on to our profit, that's one. And also manage our account, our balance, we have to have tight stops. We have to. If we don't have these tight stops, we're gonna blow this account. All right, and even for you, you're gonna blow the account if you don't have a tight stop. Your stop don't necessarily have to be the same as mine. It all determined on one, your account size, your risk tolerance, if your strategy work, if your discipline. It's a whole factor of things that you use to determine your stop. So your stop don't have to be my stops. All right. Anyway, profit target 10 to 40 cents. Now profit is endless, so it don't even have to be 10 to 40 cents. It can be more than that, as long as that opportunity is there and as long as price action continue to go in that direction, right? And I'm looking to typically take partial along the way of my trades. All right, especially if it's going in my favor, right? Now, this is what I use. This is called the Dom. This is the Dom. This is on Thinkorswim. I do use Thinkorswim in conjunction of TradingView, but I do prefer Thinkorswim over any other charting platform. But here's the Dom. Some of you guys call it the ladder, right? So let's break it down, right? So this is what we're looking for on the Dom. We're looking for green on the time and sale. Time and sales are right here. So we're looking for green on the time and sale, which represent more buying order coming through, which mean more buying volume. We want to see more green than red. What's that's going to tell us or indicate to us that there is a lot of interest. There's going to be a lot of support to where price will continue to go higher, right? Two, the number of shares on the DOM decreasing as order are coming through. So if we're at a price range where there is some type of hitting seller, we want to see the price going down, or the number I should say going down. So you see how this say 9 right here? We want to see this say 8, 7, 6, 5, 4. That means a buyer is buying from that person that is there sitting on the ask, and there's a high chance that price will continue to go up because people are buying from the people that are sitting on the ask, right? Now, 3, the price should be moving up. That's obvious. We want to see price to continue to go up, and that's how we make our profit. That's plain and simple. And number 4, we want to see the stock hitting. We want to see the stock hitting all-time highs, or high of day, I should say. When we see that, that means there is more people looking to push the price up. People are interested, and we want to trade what everyone is trading. It doesn't make sense to be trading any stocks that no one is paying attention to, right? All right, let's continue. So now we're at the end of the video. So this video was supposed to be quick, simple, just kind of give you a breakdown of what my strategy is, what I'm looking for in terms of like my profit, my entries, my exit, and the tools that I'm using. And I'm curious, all those things as well, what you guys are doing. If you guys are starting a small account, not a small account challenge, but if you guys have a small account, what are you guys doing, right? So let me know in the comment section. So I want you guys to actually join me on this journey, right? You guys could follow through and see how I operate with this account, right? I want to make sure you guys see me trade live. I want you guys to hold me accountable. That's one of the reasons I'm also doing this and making it like a scenery so you guys can see. I want to be held accountable. So if I'm losing, you guys see the transparency. If I'm winning, you guys see the transparency. If I'm having a hard time, I want to show you guys transparency. So if you guys want, you guys can join me on all 3. I do have TikTok. I'm gonna also put that in the description. So I have my Instagram, KL, which is Key Life Trading. We do have our Discord. Tap into that Discord. I want you guys to come follow me and just join the community. I want to be around like-minded traders. Let's put it like that. I want to be around like-minded traders and just share my information. I want you guys to share your information and just help each other to get better at what we do in terms of trading. Also, we're giving away like, prizes and stuff like that for people that participate in the community. But apart from that is really to grow together and really just build a community of like-minded traders. And then also, the YouTube, like, subscribe, leave the comment. And the benefit of all 3 of these is that you'll see me in action. You'll see my journey. You'll see if my strategy actually work or not. And this is not to come off on a high horse. I'm like, oh, my strategy is the best, because I might make some mistakes. Just to go along the journey. We all make mistakes, and that's not what I'm looking or aiming for here. But I just want to be transparent with you guys and just create a community. All right, so please do me a favor and follow. join, and subscribe to the channel. All right, so hopefully you guys enjoyed that, and I'll see you guys on Monday. Be there or be square. Join the family, and I'll see you guys. Peace.